Hello everyone and welcome back to our channel. Today we are going to dive into a topic that affects every one of us, inflation. You may have noticed, prices seem to be rising everywhere. Whether it's at the grocery store, at the gas station, or drinking your favorite cup of coffee, it feels like your money isn't worth as much as it used to. Have you ever wondered why this is? Well, in today's show, we're going to explore what inflation is exactly, what causes inflation, how inflation affects your wealth, and most importantly, how you can protect yourself and your money from it. Let's start with the basics. What exactly is inflation? In essence, inflation is simply the increase in the price of goods and services over time. When inflation occurs, the purchasing power of your money decreases. This means that the same amount of money you have today can buy fewer goods or services in the future. Imagine this. A few years ago, you could buy 10 cups of coffee with $50, but today that same $50 might only buy 7 cups of coffee. That's what happens with inflation. Economists measure inflation by looking at the average increase in the price of a basket of goods, including food, housing, and transportation, over a specific period of time. Moderate inflation is generally seen as a normal part of a healthy economy. But when inflation gets too high, it can become a serious problem, shrinking the value of your money and making life more expensive. Now, let's break down why inflation happens. There are a few key causes. First, there's demand pull inflation. This occurs when demand for goods and services exceeds supply. Picture this. During a period of economic growth, consumers and businesses are spending more money. This surge in demand pushes prices up, especially if supply can't keep up. A classic example of this is the 1970s oil crisis, when demand for oil skyrocketed, causing oil prices, and consequently, prices across many industries, to spike. Next, we have cost-push inflation. This happens when the cost of production increases, and businesses pass those costs on to consumers. For example, when the COVID-19 pandemic hit, supply chains were disrupted, manufacturing costs soared, and many businesses had to raise their prices to cover those rising costs. The end result: higher prices on everything from food to electronics. Finally, there's monetary inflation. This occurs when central banks print more money than the economy actually needs, resulting in the devaluation of currency. Historically, Germany in the 1920s serves as a prime example, where excessive money printing led to hyperinflation. People were using wheelbarrows full of cash just to buy basic goods. The value of money evaporated overnight, and savings became worthless. So, what does all of this mean for your wealth? Unfortunately, inflation isn't just a distant economic concept. It has real, tangible effects on your personal finances. First, savings lose value. If you've been saving money in a low-interest savings account, you're actually losing money to inflation. For instance, if inflation is at 3%, but your savings account only earns 1%, your money's purchasing power is effectively shrinking by 2% each year. Second, wages and salaries often don't keep pace with inflation. Even if you get a raise, if inflation is higher than your wage increase, you're still losing out. Think about it. If your salary goes up by 3%, but prices on everyday items rise by 5%, you're actually taking home less in real terms. Third, investment assets are also affected. Many traditional investments, like bonds or cash, don't offer returns that outpace inflation. For example, if you invest in a bond with a 3% return, but inflation is 5%, you're losing money in real terms. And if you've been relying on cash savings or low-return investments, the wealth you've worked hard to build could be gradually wiped away. So, what can you do about it? Fortunately, there are strategies you can implement to protect yourself from inflation and even use it to your advantage. Invest in stocks. Over the long run, stocks have historically outpaced inflation. While there will be market fluctuations, high-quality companies tend to grow their profits and pass those gains along to investors. For example, companies like Apple or Amazon have not only survived inflation, but thrived during periods of rising prices. Just be sure to pick stocks carefully and think long-term. Consider real estate. Real estate is often considered a solid hedge against inflation. As the cost of living rises, so too will the value of property and rentals. Real estate investing, especially in areas with strong demand, can be a great way to outperform inflation while providing you with rental income. Precious metals, such as gold, are another classic inflation hedge. Gold has retained its value over the centuries and tends to rise in price when the value of currencies declines. It's a great way to store value outside of traditional currencies. Diversify your investments. The key to protecting your wealth during inflation is to avoid putting all your eggs in one basket. By spreading your investments across a variety of asset classes, stocks, real estate, precious metals, and even inflation-protected bonds, you can reduce your risk and potentially increase your returns. Increase your income. Finally, one of the best ways to combat inflation is to increase your earning power. Look for ways to upgrade your skills, start a side hustle, or invest in your business. The more money you make, the better you'll be at keeping up with rising prices. That's the scoop on inflation: what it is, what causes it, and how it affects your wealth. But remember, inflation isn't all bad news. With the right strategies, you can protect and grow your wealth no matter how high inflation gets. If you found this episode helpful, don't forget to like, subscribe, and hit the bell icon so you don't miss any updates. And leave a comment below. What is the biggest impact of inflation on your life? Is it higher gas prices, higher food prices, or higher rents? I'd love to hear from you. Thanks for watching. Until next time.